Today we're covering Bitcoin and specifically whether it has topped out for this cycle or if we could see another leg higher in the coming months. If you're enjoying the content, don't forget to give the video a thumbs up and make sure you're subscribed to the channel. Alright, now let's get into it. First, I want us to cover the market cycle theory. So essentially, every 4 years we have a completed market cycle. So both a bull market as well as a bear market. Now, depending on which one is longer, we can either have a left translated cycle, meaning that the bull market is shorter than the bear market, or a right translated cycle, meaning that the bull market is longer than the bear market. So throughout Bitcoin's history, we've only had right translated cycles, meaning that the bull market was longer than the bear market. So excluding the first cycle, because this one was a low liquidity cycle, we've only had right translated cycles, as we can see here, from 2011 to 2014. Then, so this was a 3-year bull market, then a 1-year bear market, then again a 3-year bull market, a 1-year bear market, a 3-year bull market, a 1-year bear market. So this has been the history for Bitcoin. And as we can see here, now moving to the present, we've had a bull market for the past 2 years and a half. So technically we've invalidated the possibility that this could have been a left translated cycle, as it went beyond 2 years. Okay, so there comes the question on, has Bitcoin topped out for the cycle, or can we still see another leg higher? This is the question I've seen a lot of people ask on the timeline for the past few days, especially that we've seen some volatility here for the past few weeks. So in this video we'll answer this question. Now, on a high time frame perspective, I have two main scenarios that could take place moving on from here. The first one, and this is actually my base case scenario, is that we're currently in a deviation below the range lows. Something we've seen happening throughout this bull market many times before. So the first time was back in the March of 2023, when we had a very short consolidation range and a deviation preceded the actual breakout from it. Similar to the summer of 2023, when we had once again a similar deviation here before the actual breakout. And once again we had a small consolidation phase in January of 2024, which was also ended with a deviation below the range lows that preceded the breakout. And once again in the summer of 2024, in early August, we all remember the yen carry trade crash that marked the macro bottom. So there comes the question on whether this could be just a deviation below the range lows, or whether this is an actual breakdown and this precedes the bear market. Now, this is my second scenario, which we'll talk on in a few minutes. But first, something I'll track moving on in the coming days will be the market structure. Now, in order to maintain this bullish scenario intact, okay, so the one we just talked about, this being a deviation that precedes the breakout from this accumulation range, we would need to see the price holding the 2024 March highs. So we could see a deviation, I don't exclude it, I don't rule it out, below these range highs. But what I would really want to see is the weekly close not going below this one. And this is truly important because I believe this would invalidate the bullish structure of Bitcoin. This would increase the risks that the cycle top is in at 108,000. So this is something I'll track moving forward. Again, I believe that holding on a weekly time basis the 2024 March highs is truly important moving on from here. And again, on the low time frames, we could see a deviation below it. I don't exclude it to see something like this and then the actual continuation. I believe this will shake out a lot of investors, but if it occurs, this needs to be a wick and not a close below these range highs, because else we risk invalidating the bullish structure, and that increases the risks of the cycle top being in. The second scenario I'm tracking now, if we see a breakdown below these range highs, so something like this, and then a rally, something really important will be this rally, because if we test the range highs at $100,000 and then we start off another range, so the price once again chops in this range, and we see certain confluences forming, such as euphoria coming back to the markets and unusual weakness in the Bitcoin dominance, or altcoins starting to massively outperform due to the euphoria in the markets, then these would be some signals that it's time to start building a cash position at these levels, as this could act as a complacency zone moving forward, and this could actually imply that the cycle top is in here. But this would be the bearish scenario, and again, with the current available data, I don't think there is enough to clearly say that the cycle top is actually in. Okay, this reversal will be the one that it's worth tracking moving on from here, because I believe it will bring us a lot of data and a lot of confirmations on whether the cycle top was actually in here. But for now, nothing has really changed. We're still in the same type of scenario we have been throughout this bull market, in which this is a deviation, once again a deviation, and until we have a clear invalidation of this thesis, I believe this should be our main scenario moving on from here, that this is just a deviation until we have a future continuation. And again, some invalidations of this could be that Bitcoin breaks below the 2024 March highs and invalidates the weekly bullish structure, okay, with a weekly candle close below these levels. Or we could have that Bitcoin starts off another range, and this is the actual distribution range in which we also have an alt season, we have euphoria coming back to the markets, and so this could act as a complacency zone that precedes the actual bear market. So these would be the type of confluences that would invalidate this bullish thesis, but until they emerge, I believe that the base case is the bullish one, and that should be pretty much it. So this is something I'll keep tracking moving forward on the high time frames. These are the two scenarios that I see playing out. And so let's move on to the lower time frames and see what we should expect from Bitcoin in the next few days. So moving on to the lower time frames for Bitcoin, we're seeing some interesting developments on the charts. Now, a lot of people are really euphoric. A lot of people are very excited that things are back, that Bitcoin is going up, that, you know, we crossed 89,000 once again. But I'm personally more cautious here until we have a clear confirmation that this is indeed the bottom and that we're headed higher, right? Now, for the past few months, we have been in a downtrend, and some key features of this downtrend was that so far we saw only lower highs, right? Each time Bitcoin formed a lower high. So as we see here, and now the high sits at 92,000. And as I said here, this marks our prior breakdown point where we had the last pullback from. And so a move above it would mark an external break of structure, as I said here, and would act as a bullish confirmation. So this is something we need to see first in order to flip bullish on the lower time frames. Now, of course, I don't think that waiting for this is absolutely necessary. Something I consider equally as important is crossing above this resistance range, this golden pocket. And in my opinion, if we have a clear break above it, then the chances are that we will see a continuation of the rally above the external break of structure, and it will come really soon after that. So this would be the confirmation that I would need in order to flip bullish on the lower time frame. Now, another feature of this downtrend was that so far we have only seen lower lows being formed, right? Each time there was a lower low. A lot of people are asking on, well, weren't these higher lows? And I would say to that there's a difference between an internal market structure and an external market structure. Now, in order for this to be a higher low, an external higher low, we would need to see an aggressive pullback like we've seen here, and then an aggressive bounce to the upside. So this would mark an external higher low, which would be awesome. But here there were these continuous lower lows being formed on the lower time frames, and that eventually led to this major sell-off. Now, what led to this sell-off was the fact that there were some liquidity levels being untapped. So there was this series of untapped lows that was forming on the lower time frames. And the argument here is that once this series of untapped lows forms, this results in a lot of liquidity sitting at these levels. So for example, if traders want to take a long position here, they would set their stop loss at the nearest low, which would be this one. If you would want to enter a long position here, you would set your stop loss at the nearest low, which would be this one, the 13th of January lows. And so if this happens, if this series of untapped lows forms, then you have a lot of, well, stop losses sitting one against another, right? And so if something bad happens to the markets, like we had in late February regarding tariffs, that leads to essentially a liquidation cascade that triggers all of the stop losses of long positions and triggers this massive sell-off. Now, a similar thing happened in early March when we had this series of untapped lows that was forming on the lower time frames, and so we had yet another liquidation cascade that sent us to $76,000. And now we're seeing a very similar thing once again developing on the lower time frames, as we have a very similar series of untapped lows developing while everyone is getting really excited. And as I covered in one of my latest posts on X, something that's really keeping me cautious here is the fact that billions of long positions are once again getting into the market, as we see reflected between the rise in the price and the rise in the open interest. And so there comes the question on whether we could have yet another event that could trigger all of these liquidity levels that would trigger all of the stop losses of long positions. And my argument on why these liquidation cascades happen in the first place is that market makers need to create for themselves an artificial counterparty. So what this means is that market makers need to buy in large sums of money, so they can do it directly through market buys because they would affect the price. Instead, they do something more clever, and so they set up these series of untapped lows for traders to
set their stop loss here and here and here. So this creates liquidity levels. Now, as I said earlier, once an event comes out or some news that triggers a sell-off in the market, this results in a massive liquidation cascade that triggers all these stop losses. But essentially, these stop losses represent forced sell orders as they close a long position. And so if market makers want to buy, they have a forced counterparty to trade with, as all of these stop losses get triggered and they get filled by the demand coming from the market makers. So this is how I would say, this is why I believe these happen in the first place, and what this leads to eventually is short-term pain for long-term gain type of scenario, in which, okay, there's a lot of short-term pain, but that leads to a long-term gain and a healthier bounce to the upside afterwards. So again, as a conclusion, I would like to emphasize that I'm cautious here. I'm keeping a cautious approach on how I'm trading this range, and until I see a clear confirmation that this is the actual breakout we've been waiting for, nothing has really changed, in my opinion, from the downtrend we have seen throughout all of these months. And so we need to see, first of all, the price going above this resistance range, above the 0.618 Fibonacci level at $88,000, with then a successful retest of this resistance range, and then an external break of structure above the prior breakdown point at $92.8 thousand. So this is what I'm currently tracking on the lower time frames, and I'll share an update soon once there are new developments on the charts. This has been the video for today. Thank you all for watching, and if you enjoy similar videos like this, please make sure to show your support by hitting that like button, and make sure you're subscribed to the channel so you never miss out on future videos like this. Thank you all for watching, and see you guys in the next one.